You want to find stocks under $5 that have good value? Oh, and you want it to be free? I got you. FinViz is a completely free website, and if you jump into this screener tab, they have a huge list of different ways that you can sort your scanner to find any types of stocks you want to buy. Today, we're going to be finding the stocks under $5 with the best value. So if I jump back into the descriptive tab here, our first and most obvious choice, we want to set the price to any stock under $5. Now, there's also this technical tab where you can look at how it's performing against the 200 simple day moving average, what's its 50-day high-low, what's its beta, etc., etc. We're not going to worry about any of that junk today. We're going to come into the fundamental tab and we're going to look for true numerical value on cheap stocks. The first scan we're going to talk about is forward PE, and I want to set this to under 20. We want to look for stocks that are reasonably priced on their predicted earnings, right? And we're not going to go too crazy, not like under 5, anything like that, but under 20 seems to be a good ballpark to have. Now, why do we look at forward PE? You know what price to earnings is, right? Price over whatever their current earnings are. Well, forward PE takes into account their expected earnings moving forward. And I always find that to be a better valuator of strong stocks. Because if we go to the Yahoo statistics page for NVIDIA, of course, one of the strongest stocks in the world right now, its current PE is at 72. Its forward PE is only at 35 because its earnings are going ridiculous. And don't worry, we'll talk about what each of these last two websites are as we dive a little bit more into it. But because of that, I want to be looking at a cheap forward PE because I want to find stocks that have these strong growing earnings. And if you cut just the current PE to under 20, you sort of avoid the stocks that are currently growing, and you don't want to do that. So forward PE under 20 is our first setting. Now, speaking of wanting to find stocks that have strong earnings growth, let's jump back into our screener and let's go to this EPS growth quarter over quarter, and I'm going to set this to over 10%. Now let's start to take a look now. If I scroll down so I move my head a little bit, let's start to take a look at the earnings growth on some of these tickers. This is, of course, NVIDIA. If I change this chart to this ADN stock, you'll see decent little growth coming regularly, even though maybe not so much right now. They won't all be perfect, of course. If I look at ADV, nice earnings growth quarter over quarter there. If I look at AENT, well, this one just has a giant jump. Wow. Oh, this is a really light volume stock. Okay. If I come to ALIM, just for one last look, nice, perfect little quarterly earnings growth chart there. But once again, as you can see, this scanner setting of an EPS growth quarter over quarter starts to point you towards now we're looking at stocks that are priced reasonably, but growing. In a similar vein, but on a larger time scale, I want to zoom out a little bit. And yes, I want to see stocks that have earnings going up right now, but I also want to filter this sales growth over the last 5 years to also over 10%. Stocks have to be doing more than just growing this quarter, right? They also have to have been strong over a longer time frame. Just like when we talk about in backtesting strategies, when you're doing fundamental analysis, you have to look at separate time frames as well. There'll be a ton of stocks that are going to get EPS growth this quarter that have been terrible for the last 5, 10, 15 years, right? So you want to make sure in your fundamental analysis, you're getting a little bit of that zoomed out exposure as well. And in this FinViz screener, we're going to do that with the sales growth of the past 5 years also being set to over 10%. Now we are going to set up one more setting within this scanner, but then we have to talk about sorting the scanner so that the strongest stocks appear at the top. We have to talk about the Yahoo Finance statistics, and we have to talk about this macro trends chart so that you are checking that the stocks that are appearing on the scanner are actually ones that you might want to go out and buy. So don't go anywhere after we set this. But I want to set this debt to equity because a large problem with cheap stocks often. They might have great valuation. They might have great sales growth, but often they're very dangerous. And the reason why they're so cheap, even though they look like they're growing fine, is because they are in heavy, heavy debt. So I'm going to set this debt to equity ratio to under 0.5, which in layman's terms means that for every dollar that the company has, it has 50 cents or less of debt. Once again, just to protect from really, really heavy debt stocks appearing on this screener. Now let's talk about sorting this thing so the best stocks appear at the top. This is a very, very important part. We've got our setup correctly. We've got the right kind of stocks appearing on the scanner. But how do we figure out what is the best of the best? What I'm going to do is I'm going to jump into this valuation tab here, which of course, if you notice, changed what you see in the screener results. And then I am going to sort top down, largest down on forward PE. And that might sound a little bit counterintuitive. Trey, haven't we been building this entire scanner to find cheap stocks? Yes, but I want to, when I am buying a stock, I want to find stocks that meet my metrics, yes, for under a 20 forward PE, but also aren't falling out of graces with the market, right? The market is still giving it a decent valuation. Anybody can find and buy dog shit companies that are extremely undervalued. There are hundreds, if not thousands, of extremely undervalued companies out there that will never recover, that will continue going down forever, right? You want to be looking for stocks that are undervalued, but the market still favors it to a degree, right? So I sort top down by forward PE on my scanner. Next, let's talk about this website. This is Macro Trends. I'll link this as well as the other websites in the description down below. But if you focus on this middle chart here, this is a bar graph of quarterly revenue. And we want to be looking for stocks that have a growing quarterly revenue. We want stocks with strong fundamentals and a solid growth story. If you can combine both of those things, those are the stocks that, of course, not always, but those are the stocks more likely to end up becoming home runs. So if we jump back over to our stock screener, the first one on the list is RLX. So if I come into this, type in RLX, simply enough, it will show me, okay, this one doesn't have a solid growth story. Its quarterly revenue has actually fallen off pretty hard, although it's growing like over the last 4 quarters, which is maybe why it appears on the scanner. Not an amazing growth story. So even though it's number 1 on the scanner, we might kind of instantly put this one to the side, maybe look at it later on a deeper dive. But for right now at this level, let's just keep going. The next one down is FSM. Awesome. This one does have a very nice growth story. Look at the revenue growth that is happening in this stock, FSM. This one meets this metric as well. So we would take this stock to the next step of valuation. Next, we come to the Yahoo Finance page for the stock FSM. Once again, will be linked in the description down below. Then we're going to jump into this statistics tab. And here I'm going to check a couple of things. One, market cap 1.43 billion versus a revenue of 842 million. Not bad. The revenue is over half of the current valuation of the stock. Not bad. Price to sales 1.6, price to book 1.16. Maybe you want to see that price to sales a little bit closer, if not under 1, if you're looking for undervalued stocks. But neither one of those ratios are awful. Next, and maybe most importantly, I'm going to come down here. I really use this page to get a very quick, now trust me, this is a very quick fundamental analysis, but at least a glance so that I can, while screening the stocks, get them through these phases before I maybe deep dive into some much deeper fundamental analysis. But I want to take a glance at EBITDA, 321 million. This is the amount of money that the company makes every quarter after all their fees go out. In layman's terms, that's how EBITDA works. There's a more complex definition, but in layman's terms, that's EBITDA. I compare that to the debt. Nice. Their quarterly EBITDA is more than their debt. That's really nice. And their total cash on hand is roughly half of their debt, which is right about the lowest mark I want to see it. But still not bad. I would say this stock, while not like jumping off the paper at me necessarily on this valuation, would meet also this quick step of the Yahoo Finance statistics valuation for me as well. Next, we jump into the chart. This is the stock we just analyzed, and you can actually see over the last quarter, it's on hell of a run. So maybe other people are starting to see what I just saw from my quick valuation of this stock. But this is the point where you would go out and apply your own strategies, of course, to the trading of this stock that we just found using our new free screener. Hey, let me just say this as well. Please don't go buy FSM just because you watch this video. Please don't just go blindly buy any stock off the screener because you watch this video. Do your own analysis, apply your own strategies to it. You need to do your own thought process before you enter any stock, please. So I obviously just gave you all this scanner for completely free, but I also uploaded it to my website, daytradingstrategies.net. If you jump into FinViz, click this best under 5. It takes you straight to the screener, already sorted the way we want it to be sorted. And on my website, daytradingstrategies.net, there are a multitude of other stock screeners you can access. There are a multitude of strategies, scanners, indicators. So if you're interested in any of that, if you think the screener or anything else you get access to will make you more than $25, which is the cost of the website, why not click the link in the description down below? Go check it out. Go sign up. Become a better trader today. And remember, the links to the macro trends and the Yahoo statistics will also be in the description down below. So go open those links, bookmark those pages. With all that being said, that's going to do it for this video. Hopefully you all found value in it. Make sure you like if you did. That actually helps. And make sure you're subscribed if you're new. You made it to the end of the video. I upload videos almost daily on this YouTube channel. Subscribing's free. You can always change your mind later, so go do that. On the outro screen, YouTube's going to recommend you a video, so maybe check that out as well if you're interested.
Trading stocks. He talks about trading stocks. It's important for you Americans and other international individuals to learn about stocks.